Hello, welcome to European Open briefing for Friday, October the 12th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. So we're seeing a bit of a recovery in global equities. Most Asian indices closed the day in positive territory, and we saw gains of between 1 and 1.5% in China, and we're also seeing a positive start in Europe as well, though overnight shares on Wall Street once again fell sharply, with both Dow Jones and the S&P 500 closing down by more than 2%. The US dollar has steadied though, as market sentiment does start to improve. You can see the dollar index slightly lower at 94.97. Dollar yen recovering from yesterday's lows below the 111 level to around 112.30 at the moment. The euro continues to benefit from the weaker US dollar. It's attempting to climb back above the $1.16 level. Sterling is also positive this morning. There are rumors that we could get an announcement on a Brexit deal as early as next Monday. Sterling currently up slightly at 1.3250 against the US dollar. If you have a look at the risk-sensitive Australian dollar, the Aussie has been performing surprisingly well over the past couple of days, despite that sharp deterioration in risk appetite. The Aussie has been benefiting from higher commodity prices, in particular the ones that it exports. So the Aussie saw a bit of a rally yesterday in early Asian trading. It's currently trading slightly off those highs at 0.7122 at the moment. The Kiwi is flat, while the Canadian dollar also managed to rebound from 2-week lows as oil prices start to go up again this morning. We can see at the moment WTI crude up by more than 1% and $71.81 a barrel. So oil prices benefiting from that turnaround in risk sentiment, as well as expectations of short-term, possible short-term supply shortages as those sanctions on Iran come nearer as we head towards November. Gold prices yesterday rallied sharply, hitting a 2-month high. This morning they're down though by around 0.4%. And looking at the main performers, oil is at the top of the table, followed by euro yen and dollar yen. So the yen is also retreating this morning as the risk appetite starts to recover. At the bottom, we've got gold pairing yesterday's sharp gains, and dollar also falling, being one of the worst performers against the Canadian dollar. Looking now what's happening to the dollar yen, we can see that significant retreat since early October. Yesterday, the prices dipped to 3-week low 111.83 before recovering above the 112 level. The dollar index earlier today slipped to 2-week low 94.96. So overall, the dollar has been steadying since late US session yesterday, despite the fact that shares on Wall Street didn't manage to recover. We saw very high volatility in US trading yesterday, with the main indices moving very sharply up and down before ending the day more than 2% lower, and they're headed for a weekly loss of more than 5% unless we see recovery today when the US market opens. US Treasury yields, though, although they fell sharply yesterday, they're up today. So the pullback in yields overall during the week has also been weighing on the US dollar, apart from that sell-off on Wall Street. And also yesterday we saw US inflation, the consumer price index, coming in below expectations for September. So that has also contributed to the dollar weakness, and it also means the Fed doesn't really need to raise rates at a faster pace. Let's now take a look at the Australian dollar. We can see a bit of a seesawing over the past couple of days, but yeah, initially we did see big declines early yesterday before a strong rebound, with prices rising to a near 1-week high, more than 1-week high of 0.7130 against the US dollar. Prices, the Aussie dollar pair was also helped by Chinese trade numbers released earlier today. We saw Chinese exports growing at an annual rate of 14.5% in September, December expectations were for a slow rate of 8.9%. But China's trade surplus with the US reached a fresh monthly record, putting it on another collision course with the Trump administration. Though we are seeing reports that the US, for the time being, has decided against naming China as a currency manipulator in an upcoming Treasury report, which will be released in the coming days. But apart from the weaker US dollar and slight improvement in risk sentiment this morning, the Aussie has also been benefiting from higher commodity prices, in particular iron ore and copper, which jumped upwards yesterday. And a quick look at gold prices. We can see prices finally breaking above their recent upper range of $1,215 an ounce. Yet they jumped to 10-week high 1,226.27 yesterday, and we can see prices now moving comfortably above that 50-day moving average in the daily chart. So gold prices hasn't really benefited from the rising global trade tensions, as US assets have been more attractive, and of course the stronger US dollar is negative for gold prices. But if we do see a more sustained dollar weakness, we could see gold prices finally turning more bullish. That's it from me. Thank you very much for watching, and have a great day.